Hello guys, my name is Martin, and today I'm not sharing mixtapes. Today I'm going to be a teacher. So most traders lose money because they do not understand why price moves. And today I'm going to show you how the market really moves using liquidity, fair value gaps, order blocks, and breakup blocks. And as you can see, I'm on the gold chart. It's the USD CFD on the 5 minute time frame. So the first thing you need to understand is liquidity. And liquidity is simply where traders place their pending orders, and those pending orders might be stop losses. So like you can see, there is this high here, like I've marked these are session highs. So liquidity can be found resting on top of session highs, and it's also equal highs or equal lows, session highs and session lows, daily highs and daily lows, yeah, something like that. So when you see price take out these highs or lows, like in this example here, that's not random, that's just market collecting liquidity. And because market moves from liquidity to liquidity, so it has to collect some liquidity, so it uses that liquidity as fuel to move to the next liquidity. As you can see here, we swept Asian low and we targeted Asian high. Okay, so number two is something we call the fair value gap. A fair value gap is simply an imbalance in the market, okay, and it is formed using 3 consecutive candles. So there is candle 1, candle 2, and candle 3. If there is a gap between candle 1 and candle 3, that is what we call a fair value gap. So it means price moved too fast and left some unfinished business. And when you look at this example, you can see price came back to that fair value gap, and that's when we had this impulsive move. So price usually comes back to fill the gap before it continues. Okay. So now the third thing is the order block. Order block is where institutions or the big money where they place their trades. And simply it's just the last opposite candle before a strong move. So this one is an order block, this one here is an order block, this one here is an order block, okay, this one is an order block, and so forth. So also order block also attract price because the big institution mostly they don't place orders just once. They are dealing with a lot of orders, so they can place half of their orders or a quarter, and then push price back to that zone so that they can execute the remaining orders. So that's why price comes back to that order block and then moves aggressively. Okay, so also here, as you can see, because we are here, there is something else apart from liquidity sweep. We also have something called the liquidity run. You can see we have internal liquidity here, and price just went through it, creating this fair value gap here. And as I said, price normally comes back to the fair value gap before it goes up. So as you can see at this high, this is the Asian high. You can see the way price came, it just went through it. Price went through it, leaving this fair value gap, and as you can see what happened, price came back to that fair value gap, just trapped into it, and then we had this impulsive move upwards. Okay, so I'm going to show you examples on this live chart throughout the week. So this is Monday. This is Monday price action, the one I've showed you with this example. You can see here I took this trade from this fair value gap here because liquidity was swept and an impulsive move upward caused this fair value gap. So I was expecting price to come back to this fair value gap or this order block so I can take a buy entry. and that's what happened on Monday. So now Tuesday, I want to show you examples of liquidity, fair value gaps, and order blocks and breaker blocks throughout the week. So this is Tuesday. As you can see here, price was ranging. It didn't have any clear move, so it was creating liquidity, and this is something that you need to avoid entering the market during. You have to wait for an impulsive move. So you need to wait for liquidity to be swept, and as you can see here, price really created a lot of liquidity around this area. So what you have to do is to wait for price to sweep either side of them. So here, when price swept this liquidity, you can see here we have equal highs. There is another pair of equal highs here. So that was going to attract a liquidity because some people are putting their stop losses above these highs. So they had to be taken out so that price can get the fuel, which is liquidity, to go down to target this external liquidity. Like as you can see, this is Monday and on session low. So price here swept liquidity, went down aggressively, leaving this fair value gap here. So price revisited that area. I told you that price normally visits the fair value gap for unfinished business. So it came back there and went down, targeted the liquidity that I've shown you here. This is Monday's low, and you can see what happened when Monday low was swept. Price changed character, going upwards, so it became bullish. So this is what I was thinking. I was expecting that when price swept this liquidity and created this fair value gap here, price will come back to that fair value gap, fill in that gap, and then go upward. But that didn't happen. So that means this thing doesn't happen all the time, but you definitely will get them, but sometimes it fails. So instead of coming back to this fair value gap, price created another block here, and you can see price came back to it and went back up. Okay, so now that was Tuesday. On Wednesday, you can see price took out Asia. No, this is not Asia, this is New York PM, but it was kind of just drifting, so it didn't have a lot of momentum. But when you can see here we have a change of character here, and price created a fair value gap. You can see this candle came back to that fair value gap and then went down. Okay, so if somebody was scalping, that would have been a nice sell setup. So when we are coming from the internal liquidity, what we target is the external liquidity, but you can see here price never made it to this zone. So this is the reason why the price never came back to that zone. So you can see this bearish order block here, and we said when a bearish order block when price goes through a bearish order block, it becomes a breaker block. So that means when price visits that area again, it might reject it. So you can see price came to this breaker block and then it went back up. So if maybe somebody was scalping, you could get a buy entry from that zone. So it came back to our initial fair value gap here, and you can see what happened. That fair value gap rejected price went down here aggressively, creating a fair value gap here. So price came back to that fair value gap. By now I think you should be used to this. Came back to this fair value gap and then targeted the external liquidity lying below here. So when price targeted this external liquidity, you can see it came and took it out. In that process, it created an order block here. Okay, so we said an order block is where institutions be making their entries. So when they make entries, they have to protect their zone, or also they make half of their entries from that zone, and then when price comes back, maybe they manipulate the price to come back to that zone so that they can add more sales. If they were on a sell from here, they add more entries. So that's why you can see price keeps bouncing back from that, and you can see this was a strong this was a strong institutional zone because you can see price was kept coming back and getting repelled. So you can see here when price swept this zone here and then went back to this area, it created another order block. So there is an institution, there is buyers here, there are institutions that are trying to buy and the others which are selling. So it becomes like it's an oscillation. So price comes from the bearish zone to the bullish zone and it becomes like a push and pull. But from what I can see here, the sellers here were really in control because you can see finally they pushed below. So from this zone we had liquidity lying on this zone and this zone again. So when price finally broke those zones, you can see after sweeping both this New York PM and New York AM, you can see after price swept, what happened? It went up aggressively. You can see a change of character here, and in so doing it created this fair value gap. Okay, we've said fair value gaps are revisited and a continuation happens. So price came back to this fair value gap and then targeted this external liquidity. So what happened after sweeping that liquidity, as you can see here, price swept this liquidity, went down aggressively, creating this fair value gap here, and it's like a loop now. So price came back to this fair value gap, and that's where I was trying to take my sell entry. And you can see I put my stop loss above this order block because we said price normally comes back to the fair value gap, but it can still come to the order block. And you can see here price came and tapped the order block and went down. So this is on Thursday during London session, and you can see here there was a lot of engineered liquidity. You can see these equal highs, and equal highs normally become a target for liquidity sweeps, and you can see price came and swept these equal highs, and then again what happened? Price moved down aggressively, creating what? A fair value gap. So price was coming from this order block to target this external liquidity here, and you can see it was successful. Price came back and swept this liquidity, and then when it swept it, what happened? It came back to our internal liquidity zone, this fair value gap. You can see price came back here to this zone, and then price was pushed back down to target the external liquidity here. So it's just like a cycle. You wait, liquidity gets swept. Okay, not first, liquidity has to be engineered in a range. So you find the liquidity first. If you enter at this stage, you are liquidity. So you have to wait for liquidity to be engineered and then swept. Like in this example, we have another one here. So it happens all the time. Okay. So liquidity gets swept, creates a fair value gap, price comes to that fair value gap, and you get this trade. So if you are patient enough, if you can hold all that, this was almost like 2000 pips. That was on Thursday, and that's how you could have gotten that trade. And it's just simple. Okay. So this is on Friday. I don't know if this could qualify to be liquidity, but you can see after the sweep what happened. Price created a fair value gap here and went down to target the external liquidity. That would have been a very bad risk to reward. But for example, let me just use it for as an example. You can see price came and swept this. When it is swept, it got rejected back to the fair value gap. So external back to internal, then internal, it went back down to this. This now would have been the external. So price, you can see here, price came and went through that zone aggressively, creating this fair value gap. And you remember what I told you earlier, when price goes through a liquidity zone creating a fair value gap, that is something we call liquidity run. It's not liquidity sweep. So when the fair value gap happens on a liquidity run, price tends to revisit that zone and go on a continuation. So liquidity sweep gives you a reversal, while liquidity run gives you a continuation setup. So that was Friday Asian session while most of you are sleeping. So now Friday London. The before London opened, there was this order block which was created here. I think you can see it. So price went down, revisited that order block zone, and what happened? It is sold for how many pips? 500 pips. Well, so we can see something here. We have a bullish order block from this zone, which later became a breaker block, and that's what I used to get this sell trade from this zone. So there is a breaker block here, and as you can see, we also have a fair value gap here, and you can see there is a change of character. So price went down. When there is already a change of character, I waited for price to come back to this zone, fair value gap or breaker block, and you can see what happened. Price came and went down. And in this example, you can see I put my stop loss above this order block because I was thinking that price could still come back and tap it, but you can see it didn't come. So that's why I had this large stop loss zone. And when you have a stop loss zone which is large, if you are having a 1 to 2 or 1 to 3, your take profit becomes overextended. So as you can see here, from my point of entry to the take profit was 500 pips. So when you take a trade with 500 pips, that's enough for a day. And you can see the target was the external liquidity, and you can see already it got tapped. So internal liquidity to external liquidity. Sweep to this external liquidity, price goes back to the internal liquidity zone, back to the external. As you can see, price came back to this. Then you can see here we have another order block that was created here. So price came back to it and went back down. So it's normally, that's what smart money does. Price comes from the internal liquidity, then goes back to the external, and it does that over and over. So when we put it together, what you should be looking when you come to the chart is to identify first. You identify the liquidity zones, wait for price to sweep, then look for a shift or a structure shift, then look for your fair value gap or the order block, and then enter on the retracement. So you first mark your liquidity zone like this, then you wait for price to take either side, and then wait for a momentum move to the downside. If price was buying and you want to take a reversal, you wait for a fair value gap to be formed. You can also wait for a change of character before entering, and then you can enter on the pullback. That's just it. So don't complicate things. Okay, so most people lose when they are trading without liquidity or entering before confirmation and not knowing which candle is a valid order block or not. So not every move is valid. Just wait for the story to make sense. So if this helps you understand the market better, drop a like. Also subscribe to this channel. I'll be posting more. And if you want to learn more how I personally trade gold step by step, just comment or DM me. I'll put a link down there. So yeah, that was my gold trading week recap. So what to trade? See you on the next one.